Hello, everybody. Welcome in. It's been a long time. It's been actually since a scary bullish October since the last time you saw axisALiVE and COSMOJENKINZ in the same stream. So without further ado, I'd like to welcome in my partner in crime here tonight for some technical analysis on Hex and some other assets. COSMOJENKINZ, how you doing, buddy?
Good evening, everybody. What is good, AXiS, my friend? It's been a long time, like you said. I actually haven't spoken to you like physically word to word since 2021, I guess. So it feels like it was only a couple weeks ago.
Yeah, man, it's just been a little blink of an eye. We got through a little bit of a kind of a weak ass bear market, and here we are. We've been printing interest every day, and what can I say? I mean, most of the weak hands have left the building, so it's time to talk about upside.
We'll see about that.
Yeah, I mean, it was a wild ride, man. We thought maybe, last time we were in the stream together, it was actually on it was in October of 2021, and we had just seen an all-time high on Hex, and we were seeing like record levels of volume coming into Hex. I think there was like $550 million of volume traded over like a 30-day period, which caused a giant run-up on the Hex price from roughly like that 22-cent range all the way up to like 56 cents.
Yeah.
And the way that the volumes were coming in at that time, it really looked like, that this run was not yet over. And then I think to our dismay, a lot of the fundamentals looked good, but the technicals started to break down, and then we kind of crashed quickly down to 12 cents. So yeah, I mean, what do you think about all that?
I mean, my position on that has been pretty consistent. I think it's kind of the opposite because the technicals looked really good, but I think the fundamentals switched on us when Pulse Chain didn't come after 2 months. Okay. And then it didn't come again, and then it didn't come again. Then that cup just started spilling over, and that's when the price charges got shot.
Well, yeah, no, I looked. Okay, let me preface this. Yes, you're right. When we were streaming together, the technicals looked good, and it looked like Hex was heading higher and breaking into no man's land. And you're right. When as the bad news kept coming in, and then that was coupled with some very, very large emergency end stakes. We're talking like $25 million emergency end stakes that then were market sold. Like that was just too much pressure on such low liquidity. And yeah, the price did start to spill over.
Yeah, I think it was pointing at $1. It really was. I think if Pulse Chain kind of just came like how it was marketed in 2021, Hex was ripping. Everybody was getting in for that BOGO before the snapshot. I mean, that thing had no plans on slowing down. Maybe a stop at 75 cents, and then you know how those levels you're looking at. But here we are, though. It is what it is.
And looking back now, obviously, yeah, it's been painful for a lot of people that kept continuously buying all the way down. But I think for the most part, we're out of the weeds, and that the bottom on Hex is in, and that there's a lot of sentiment starting to really change and shift back to the upside now. And I think a lot of this, you can look into like the deeper data on this and see how the annualized inflation rate and like the monthly amount of dollars being printed monthly from stakes is actually decreased to the amount where it's only like between $7 and $8 million of new Hex being printed per month, and the market's trading like, I think just on the USDC pair this month we traded $88 million of volume in the last 30 days. So like the 8 million, if all of the interest was sold on market, that $8 million would be completely just eaten right up. So like different from back then where we had record high inflation coming out. We're talking hundreds of millions of dollars of Hex at those prices coming out on a monthly basis. And so I think that's also, this sell-off has given us time to chew through the inflation and to reset the system, so to speak.
Yeah, I've been very impressed. I was on a Twitter space. I think it was Tangent's Twitter space. They told you and me to get on the other day, and looking at the volume of just the 5 minute, the 1 hour, the 6 hour. I mean, you're seeing $4 million in the past hour and a half, or $1 million in the past 5 minutes, just split between buys and sells, and you're seeing a $375,000 sell-off, and the price moves barely a tenth of a penny, and then you just see a bunch of little wallets just eat that up. It's something you don't see on a typical altcoin / meme coin. After like it has its one run, then it dies. This is I think what we're seeing now in Hex with the amount of volume and liquidity is a legitimate coin. cementing itself in crypto, which I mean, it's always been there. We've always felt that way, but now we're actually seeing it. For anybody that doubted it, or anybody that's, you know, almost shaken out by this bear market, those are things you have to look at beyond the chart to see, like, man, there's real money coming in and out of this coin, and all it takes is just a typical bull market for all of crypto to really just make everyone forget about, you know, the past
100%.
500 days.
Yep, and then to support your claim, like look here, just on the 7-day volume on the USDC pair. This is in 7 days we've traded 92 million bucks, and the price got up like 280%.
Yeah, that's
You know,
insane. That's a lot of money.
and then 40 million was traded on the ETH pair, which tells me that, you know, the Ethereans are starting to take notice, and maybe they're feeling a little bit left out and needing some exposure to Hex as well. And then if you look here at on the TVL, like you can see that there was a clear break out of this squeeze. So if I pull up this, let's see here. These are my private chart sets, guys. If you want more of this, go to my website.
Look at the preparation.
Check this out. So if let me have to make it bigger. So you can see here, this was a giant liquidity squeeze from the all-time high. Basically, this was around the 44-cent range. And so like ever since then, this was basically a bunch of traders trading money back and forth and trading the price down endlessly. And also with some big accounts just exiting the system as well. And so the volume or the liquidity was getting squeezed for many, many months. And actually just recently we broke out, formed some support, and now the TVL is getting punched higher.
Yeah, that's looking. I'm trying to see it's not so big on my screen, but it looks like, yeah, the little descending wedge kind of broke out, and it even looks like there's a retest on that descending top line, confirmed support.
Yes, sir. Yep. And so what I like to point out here is, maybe if I make it a little bigger, we can actually dive in here, and I can show you exactly what I mean. But basically, if I'm to draw on this here and point out this general region here. Oh, shit. 1 sec. I'm going to have to do some magic. By the way, guys, we're not just, this isn't going to just be Hex only. We got a lot to talk about, so I just got to get this damn thing up. So on the Uniswap pool here, I kind of went through this yesterday with my stream with Hans, and the basic thinking here was that from back in 2021, in the early on in here, where this would have been like roughly August of 2021, I think. No, I think this was summertime, and then it got through, and then this was basically August here. So August 22nd, like right in here. Okay. This whole time, the price of Hex went from like 5 cents to 22 cents. And the liquidity just went basically up and to the right, slowly sideways, where USDC got inputted into the pools, then Hex would get pulled out. And USDC would come in, then Hex would get pulled out. USDC would come in, Hex would get pulled out. And this created this rarity, this De Beers moment for Hex, where the coin kept getting more rare while more USD liquidity was getting put in the ecosystem. And as you can see, what ended up happening was this whole run up here on price from basically 5 cents to 22 cents was done on roughly the same amount of liquidity. So if you extrapolate that out till now, what I think is occurring is you're going to start to see Hex get pulled out of the market and USDC liquidity be injected into the market as people dollar cost average in, as new market participants enter the system. And you're going to get a run up in price that's gradual, but on the chart it'll go up large percentages because of the low liquidity, but you're going to get a gradual increase in price. And then we may not even go parabolic on the TVL locked until maybe like a pulse chain launch or some other sort of fundamental news event where the true FOMO occurs, and that's like when Hex is going to go like really viral.
You're basically drawing like some sort of fractal that you kind of see happening based on this chart.
Yeah, I mean, this is such a clean. Another way to look at this too is like this here break of this downtrend here. This clean, and it was like such a clean level here, where you broke above and then you retested here and then you bounced up, and then that bounce was met with, you know, such a huge increase in price from like 1.7 cents up to like a wick high of 6 cents on the 15-minute chart. Like that the amount of TVL locked in the pools is now higher, and the USDC balance is now higher, but the Hex liquidity has actually dropped significantly. So like if I click on the amount of coins in the pool, the amount of Hex in the pool at the bare bottom, 1.7 cents, was like between 250 million and 350 million Hex.
Oh
But
wow.
effectively, what's been happening is this number keeps getting extracted down lower and lower. So every time Hex comes up here and tests the new high, every single time. So yeah, we made like a let me see here. We made like a high here, and then we made another high here, and then we made our third high here. Every time we made a new high and got to the edge of this liquidity band here, which keeps moving up, every time we get to the end, price would sell back down into the liquidity band again, but the amount of Hex in the pool would get low, and I've seen it get as low as 9 million,
As
single
of like
digit million.
recently?
This was just recently, yep, because this is
Wow.
this is the 4-hour chart. So what's effectively happening is a few big wallets are ratcheting up the price by pushing the price up and then resetting this liquidity structure here and putting big blocks of it to act as bid support. So you can see that right now the price is playing with the tallest band of liquidity. Each one of these bands is like 100,000 bucks, 90,000, 90,000, 90,000, 90,000. And so like somebody can come in and make a $400,000 market buy, absorb a ton of this Hex liquidity, and then the price has less friction up into here, and then even less friction, and then even less friction. What this is doing is every time that this happens, it ratchets up the price, and it forces people back here with their liquidity to move it up further into the price range. So that's why like a week and a half ago, there was no liquidity out in here, but now slowly people are starting to reposition their liquidity in anticipation of a new range.
Yeah. That big wick, I'm pretty sure, and I haven't looked at this chart yet at all the past couple of days. I'm pretty sure the big wick on this chart is where the price bounced off of today.
Yep. So 4.2 cents to 4.17 cents.
Yeah,
And so if we pull up this chart
we're
here, you can
exactly where we went.
so you see here where the price is like starting to like form some sort of it's trying to correct here and
Yeah.
find support. So like let's say there's two ways that I see this playing out. And I want you to give your TA first with your support levels, and then we'll come back to this particular chart.
Okay.
Sound good?
Yeah, sounds good to me.
All right, pulling you up.
All righty. Well, so I just try to keep my chart clean, like nothing on it, just so like the stuff that I draw up, it can be on a stream. Oh, hang on. So basically, where should I? So I'll start kind of where I left off last time I made a video, which is like a week and a half ago, just to kind of round people up and give them context to where my mind's at. But last time I made a video was like a week and a half ago, and I had this title like, "Oh, the Hex bull run's over if this happens." And we were sitting in this ascending triangle, and we just talked about basically breaking the triangle, coming up, setting a floor above 3 cents, and that would be my confirmation that the bull market is, here, or at least the bear market's over in the sense that the 1.7 cent bottom is 100% in, and we've gotten that and then some. So now that the price is obviously pumped, if you zoom out a little bit, my computer's going like real slow right now. I don't know why. I'm gonna go on the weekly chart first. Let me just reset this chart. So looking at the weekly chart, that first pump we had, the first macro downtrend that we kind of see with the first all-time high from Pulse Chain, and then the kind of the lows that we were making with the lower lows after the initial dump to start the bear market, that turned into a resistance line eventually, last year in the middle of the year. That macro downtrend got touched, and I made a tweet saying like, "Oh yes, that it got touched." I was saying yes in the sense of like, at least we're back at this line, because we haven't been there since August of 2022, and we're like way below it. So the good news is that we actually touched that line. So without looking at like liquidity pairs or pools or anything, just looking at simple, like, I guess, geometry to keep it 101, trend lines being touched again, that means Hex price is finally starting to return to normal. So of course, when you're above it, the price is super inflated, but when you're below it, it's super oversold. So eventually you want to see kind of like that homeostasis thing just return back to normal. And that's what we saw. So what I saw, like what stood out to me after we hit that the first time, well, I'll go to the daily chart now. Once we first hit that, we pulled back. The pullback only lasted to like 3.7 cents, which I was impressed because my video that I made from last week, like I was saying, I was expecting a nice little pump and then let's go create this floor before we get going. But the hex price didn't want to wait around and create all that structure. You can tell that this thing wants to move up and in a hurry. And just by looking at patterns and candles, for the people that know me, they know I like doji candles. We broke the ascending triangle, doji candle, big wick to the top side, doji candle gets engulfed. I mean, that's one of the most bullish type of signs you can see for a 3 candle pattern in all of TA, in my opinion. So we got that. That's why price shot up. But this is kind of indication that price is a lot stronger than maybe what I was expecting when I initially wanted to see this ascending triangle breakout. So with that being said, yeah, so I expected a little bit bigger of a pullback. We didn't get that. But now we're starting to see the market calm down just a little bit. And now pairing that with the liquidity chart that you had, we're seeing that this is pumping. Well, the cool thing about the chart that you show with the liquidity and the chart itself is if you see those big wicks in the liquidity pools, you just kind of scroll over to the left and you'll see miraculously, oh, it's just sitting right here where there's 3 wicks that couldn't, really finish above. And that's just simple structure on a price chart. So
Yeah.
That's an obvious one that stands out is, okay, look at the previous top, and that's probably where you want to see your next bottom. So ideally, in a perfect world, if you can see Hex just create this bottom here at 4.3 cents, I mean, this thing can move, get above this macro downtrend, and then eventually retest it later, and then, take off. But I will say if price does still decide to move down, just to kind of round up what I was saying for my video last week, even if price wants to come all the way back down and say 2-3 weeks of just a little bit of pullback, not saying that it will, but if it does, I mean, I would expect worst case scenario, the next bottom to be, if it still pulls back, nothing lower than about 3.1 cents, right where this doji kind of left us off the top of this orange range. So I don't know what the liquidity chart's looking like there. And obviously based on momentum right now, the price is telling us it wants to go a lot higher, a lot sooner. But all in all, I think that we need this, right? We like to see good, healthy pumps, but we also want to see a nice retest and some structure created. So in the midst of all this madness we've been seeing the past week or so, at least we got a little bit of a bull flag. We got a pump, and now we're starting to see some support created off that bull flag from about 5 days ago. So my updated idea, yeah. So right now, oh shoot, why is this going so? Oh, there we go. Clear structural line right here for support, sitting at 4.1 cents. If price for whatever reason wants to break below that, you don't really see much support in underneath this 3.7 cent range. If we go lower, that's where I'm just looking right here at the 3.1 range where the doji candle's at. Yeah. And I'll leave that. I'll bounce that idea to you now.
I do. I think you're right that if this level fails to hold, your next level is like, basically, here, I'll pull up my chart for a second. If this level here, let me clear out some stuff so you guys can see what I'm seeing. This yellow line here is the trend. Basically, that was started on January 30th, and it was confirmed on February 1st, where we exploded out of this. It was like a spring of this ascending triangle. And so that basically started the structure. And so then even if you saw a failure to hold this level, which is, by the way, remember, this is where the wicks are, where the massive bid wall is here, right? On the liquidity. If that continues to hold, yes, we're going to come back up and we're going to test that major downtrend resistance and try to get above that and form support up there. But even if it fails to do that, it's not a bad thing, because what it does is it gives investors an opportunity to buy one of the last major pullbacks on the chart before we do go and do the same thing. So for me, it's just a matter of weeks, like 2 to 3 weeks to really confirm, is this going to bull flag down, retest some of these lower fib levels, or is it going to hold the yellow trend line? That's all stuff. Those are key levels in TA that you want to look for. So obviously the 0.618 on this most recent move is here. That's roughly at 3.6 cents. So on the liquidity chart, this drops off a cliff at 3.68 cents, right? So that's where you can kind of see where, if you're a seller, are you really going to risk selling hundreds of millions into such small liquidity where you'll incur so much slippage? So it's scary for sellers to sell down past that level And it's scary for buyers to buy up past 5.4 cents because that's where you incur all the slippage. And then when you zoom in to like a 15-minute, you can see how we played with the recent local high here, how there was all these wicks. This was buyers coming in to try to push price into this low liquidity zone, which is right here, where there was basically $4,000 a rack for each like tenth of a penny. And that's just not if you're a buyer of an asset, you don't really want to incur this tons of slip. Like if you put in $20,000, you're going to move the price up 0.4 of a cent, right, against you. And so that's a threat because you'd rather accumulate the pullback. And so this is really, to me, an accumulation play by the market where this is your major support right now, and the market is like basically forced to accumulate here. And then so this is just going to, in my mind, probably find support here at this level and try to, create some sort of another ascending triangle or some sort of a bull flag pattern. And I actually detailed this last time too, on the 4-hour. We can go back to 2021. The last time we broke out from 2.5 cents back here, we'll just pull the fractal off so you can kind of see what I was seeing. We'll pull that fractal off and we'll bring it to now time. And you can see that I actually had here us to bull flag down, and back down to like that 3.2,
Yeah, that's
3.3
that's
cent
exactly what I
level.
was thinking. That where that doji daily was. That's exactly what I was thinking. And the price of the chart's just obviously stronger than expected, of course,
Yeah.
which is a good thing.
So
But yeah, like even if like for whatever reason the price wants to pull back because whatever may happen or pulse chain delays, I mean that's a massive structural range that I don't foresee being broken. And obviously, if price does go back down to 3 cents and it holds that range, that confirmation, say goodbye to the low.
so maybe I was wrong about, well, so to your main point, which was that 3.2 cents is a key level. I 100% agree with you that is the level to hold as far as like preventing further downside on the chart, and that due to the fact that Hex is decorrelating from Bitcoin and Ethereum. Let me just show people that so they can see it on a chart. But so Hex is only 12% correlated to Bitcoin right now and 19% correlated to ETH over the last 30 days. But in the last year, it was more like 55 to 63% correlated to the major pairs. So it has begun its decorrelation event. And so I'm thinking, like, regardless of if Bitcoin and ETH are going to crash or not, Hex is going to continue to overperform the market because it's already made its decision to decorrelate early. And Hex topped about 30 days or I think 30 or 60 days before Bitcoin topped in the last cycle. So it makes me think that it will also leave the bear market earlier as well. And we're kind of getting our proof now through these different data points, right? So let's just say I was wrong about this bull flagging here. Well, then what if we instead just bull flag here instead, and we just create structure above that,
Yeah,
3.5 cent level, right?
yeah,
And then
absolutely.
off to the races. And this would just create that massive triangle structure here, and just kind of try to play with, something. I mean, this is rough, but you
Yeah, of
kind of see
course.
the trade.
Yeah, and you got also too, you got to blend in the sentiment. So people now, no matter when you got into Hex, everybody witnessed what this thing is capable of. It's what's like almost 300% since the low this year.
Yeah, it's
The,
crazy, man. The wick to wick, that's like 280. Yeah, it's
Yeah,
crazy.
so people are aware, and that's not even Hex's big pumps. I mean, you go to 2021 and measure the pumps, you're talking like there's 500%, 600%, 470, whatever they are. They're really big. But I think right now people have to blend in the sentiment, knowing that like, okay, we're aware of what this thing is capable of doing, and if you are getting a dip, don't expect that dip to last that long. And that's kind of where a bull market starts. Everybody wants to buy after the price rips up, and the first time after the big rip up, you get a dip, everybody floods in, and then boom, there goes bull market 101. So
This is like like to your point, like the retail follows big green candles. So you got your big green candle on the weekly and it closed, and that's beautiful because we haven't had that big of a candle since like maybe here or maybe around big payday. You had a couple. You had some when we broke out last time at the 2.5 to 5 to 6 cent level. So this very move that we played out here in 2021 after this consolidation is maybe similar to the move that we're trying to play out here, now, just to get price moving again. And then, like you said, retail will follow the green candles once it becomes real for them.
Yeah. And one thing I will say, if you want to pop up my chart real quick, I want to point something
Bringing you
out.
up.
Let me know when it's up so I can just show it real quick.
You're up.
On a weekly chart, the one thing I will say for that would kind of back just focusing on that 3-ish cent range for support. We obviously didn't break the downtrend with last week's candle close. This week, so far, we still have 2 hours, 2 days, about 3 days left. I would want to see this thing close above. So based on like the first fractal showing the bull flag, it's a little higher you just showed, that would be ideal, right? Just kind of pull back for the next day, day and a half or whatever, and then get going, get above that downtrend, close this weekly candle above the trend line. So that would really show like good macro sentiment, right? But if this thing still shows another big wick, now that's back-to-back strong wicks we're looking at, and that might kind of tell us, hey, you know, and if you top that with whatever's going on with Pulse Chain about the bug that they just found today and whatever that may be, that might just, you know, blow out the fire temporarily, you know, and then that'll allow us to create that good structure. And then boom, give it a week or two, and then we can reset, have good structure, no imbalance in the market, and then really get a nice good push up, and probably it will align with the next bullish V3 update or something, you know. I feel like it's all tied to V3 at this point.
I think you're right. I think a lot of the stuff is narrative based right now, and I think that you're right that you know, if for better for worse, maybe it's a good thing that, you know, you got a bad update, so you're flushing out people at every level, and then it forces them to be bid support higher, basically.
Yeah, absolutely. Yeah, there's a lot of dudes on Twitter. I mean, like the BitConnect dude, he posted his tweet that he has like a big stake that ended yesterday, and he was like, I'm going to sell the interest and stuff. I was like, good. Like, that's what we want to see. Let's keep the price low, and let's let these guys sell their big bags now. And then when, you know, prices decide to just go up next cycle, there's a lot less sell pressure from these people that we don't have to worry about. The same way that the people who first bought Bitcoin under a penny to $10 aren't holding, most of them, 99% aren't holding it today at $23,000, $22,000, you know? So, I mean, fortunately for Hex, a lot of people staked 15 years, so they have no choice but to stick around. But yeah, I mean, I'm all for lower prices longer, just because there's people that retired off of this last bull market. There's people that have been so beat up over the past 500 days that any pump they can get, they're cashing that thing out. And I'm all for that personally, but I'm never going to complain if this thing just goes parabolic. I just don't foresee that happening just yet.
Yeah. Yeah, I got a question here. Somebody was wondering, like, how aren't all altcoins decorrelated and all alts have been running? How is it that Hex is doing something different? I mean, I'm just strictly speaking to Hex. And the reason why I can say that confidently is because this data is proving that over a 1 year time frame, Hex had 55% correlation to Bitcoin. So 55% of the time, Hex was going to do what Bitcoin did. It was going to go the same direction as Bitcoin did. And then 63% of the time, it was going to do the same as ETH, all right? But over 30 days, it's only doing it 12% of the time for Bitcoin and 19% of the time for ETH, okay? So that's just trying to...
Oh, yeah, go ahead.
No.
I was going to say, I think, too, the context to answer that question more, too, is we have to understand that Hex, when it had its run, it ran like almost nothing else was able to run in the past. And it was pumping harder than any other altcoin was pumping when it was doing its thing, you know? And then the dip, obviously, it decided when it was going to dip without Bitcoin kind of determining that market. And then now, yeah, of course, all altcoins are going to outperform Bitcoin on the pumps. But I think we just have to we can't forget what Hex was doing the past few years in regards to its performance now, because it is a different beast in that sense. And I just think just measure from basically bottom to top this coin compared to all other altcoins, and you'll see, okay, that's why Hex is a little bit different. But bull markets and bear markets, none of these coins are prone to any of them. Unless you drop a brand new meme coin right now and it does a 10x in a bear market. We've seen that happen last year, of course, but those coins aren't, those are like here today, gone tomorrow type coins.
Mm-hmm. Yeah. Just look at this ROI since Hex launched. I mean, it does its own thing. It beats to its own drum, and it just overperforms everything else. And I mean, you can pull up any coin that you think did well, like coins that are doing well or did well or had huge 10x run-ups. You know, Hedron was one of them that did like a 14x when it launched in pink here, in purple, but the chart still doesn't overperform everything else in the same way, you know. It's just because of the virality of the community, I think, that's in this time locking mechanic, and that just because it was a first mover, that's probably the easiest way to understand it, is that it was a first mover. Like here you can see on this chart, look, that's nasty. That pink line is an anomaly on that ROI. Like even when Ethereum recovered, it didn't recover as hard off its lows as Hex did here.
Yeah, this thing, the Hex price chart it doesn't look like anything else from day one till now. Like, it's such a healthy chart, and of course, like the dip, the 96 or 7% dip it incurred, like it was nasty. But then again, it was like, man, that thing really did run from a penny to 50 cents without really much slowing it down. I mean, look at those green candles.
I'm gonna pull up show you guys another way that it's decorrelated is when you compare it to Bitcoin's top. Like here you can see on the, let's go to a 5-day or something. You can see Hex topped first. I mean, technically Bitcoin topped first back here in April 21, but then it actually made a second, yeah, right. And then it made a second high here, but really, if this was the real double top for Bitcoin, Hex topped first, man. And you think you can say what you want, but this is in its own way a decorrelation event, right? Because it did it before, and I mean it's not a little bit of time; it was 45 days before. So
I will say though, like Hex was at one point, updating your worldview is key, and that's a key principle in crypto. At one point during the bull market, it was obvious Hex is not correlated. It's moving to the beat of its own drum. But this bear market has showed us, okay, Hex isn't a brand new coin anymore. It's starting to get a little bit normality within its cycle, and it was becoming obvious that Hex isn't going to make its run without at least the sentiment of crypto turning positive either. So now my view on the market today in regards to Hex is, yeah, Hex isn't gonna run without anything else, but when the sentiment shifts, Hex will run better than everything else. And
yes,
you can't we can't compare Hex to meme coins or anything anymore because it's not brand new, but we can compare it to the altcoins in the top 20, and you're comparing it to all those other, like, major coins that centralized exchanges have that your average Joe on Coinbase might hold. Hex is going to outperform all those, and it's going to move to the beat of its own drum in regards to that. But it's definitely going to need a crypto-wide bull market in order for it to make its all-time high run.
Yep, I agree with that. Let's see here, T-shares are getting harder to accumulate over time. Hex all about T-shares, yeah. So another chart I wanted to show you guys that is probably the most important chart in Hex is the Hex Bitcoin cross. So like this is a pretty simple chart to see. Okay, if the bottom's in on Hex, then the bottom should be in against Bitcoin as well. And so it has gotten above major resistances on this pair. This is basically the pair in my mind that you need to watch, is probably the most important chart in Hex, is the Hex Bitcoin cross. And I don't know if you had any comments on this, but just how just looking at it, you can see that the structure is so clean, like off this big payday level.
Yeah,
it's just like a clean bounce off that level, and it's also where the breakout really occurred, and then the price structure started to change.
I mean, yeah, I can show it real quick just to kind of double off what you're saying. Yeah, that so in traditional markets, back from my trading days, trading, whatever, let's say in the stock market, US 30, whatnot, we call these institutional candles, where you get a massive just push up and then a big push down that engulfs it. Whenever you see something like that, that's basically a magnet for money saying like, hey, price will eventually return to this. You just need the market to come, and you kind of scoot it to the left. What do you got? Big bullish candle, doji candle engulfed. We talked about that earlier. The doji candle right there, right next to this institutional candle. And then, yeah, Hex pretty much made its own institutional candle. If you really look at this pattern and then you kind of flip it around, Hex is doing kind of the same thing, but now it's to the inverse. So like this volatile push it had to the downside, if we measure that, a rough measurement at least from top to bottom. Let's just go. Let's be more fair about it. About an 86% push down. I mean, that's a volatile push off this level. We're seeing Hex kind of start the same exact thing, just obviously to the upside. And I mean, it's not going to do 86%. 86% down is the equivalent to like a 10 to 20x maybe to the upside. So it's cool to see that specific level be touched. And it almost looks like one of those liquidation type of patterns because you get this price kind of just be crunched in a sideways mark. Oh shoot, my mouse is all weird. It's a Bluetooth mouse and not my normal station. Let me try to draw this again. You get this price kind of trapped here, right? Just going sideways, basically since May of 2022, almost a full year, right? 9-10 months. It looks like you're picture perfect, just liquid flush, boom, just flush out, trick the bears into thinking, they're right. And then get all the bulls out that, I mean, we know we're not leverage trading Hex Bitcoin, but the psychology of the market still remains the same, right? Because that's how the markets form themselves. So this is your typical liquidation pattern. You get a volatile push up that's like directly inverse to this downside push that we saw back in 2020. So you're right. I think that's something to pay attention to. And I do think this is one of the most important charts, to look at when in regards to Hex and all of crypto. But as you can see here, look at all these levels, right? And you just get to a general range. We have a mini institutional candle at the top of that. So we basically what I'm saying is all this, we have a lot of resistance to work our way through. And then on the Hex price chart, right, we're on that macro downtrend or whatever it is. So
yep,
now's a good time.
It's not like we're going right. I mean, I'm not saying that we can't on if real FOMO ensued and Bitcoin ran to like 38 to 44K, like then Hex is probably going to go try to break that major trend line and just go straight up. But I'm not saying that's what's going to happen. It's a possibility, but to keep in mind that there's a lot of overhead resistance for sure, 100%.
And then all it takes is literally just with Hex at least V3 go live, or even a positive update at this point. That's not from like an influencer. It's actually from Richard Hart saying that it's close. If we get like an update, oh, it's close, and then it actually happens, V3, that's something that resistance doesn't matter at that point. That's where technical analysis is great for speculation, but when it's go time, it's go time. And you might be able to get a triangle pattern that you can predict, kind of like, okay, there's volatility getting ready to explode here, or more like the tension.
I'm glad you brought that up about volatility.
Yeah.
So I got something to show you that you might like.
Yeah, let me see.
Okay. So this is a chart that I had Crispy Man make for me. It's a historical volatility on a monthly. And right where you said where the market was doing that the volatility hit all-time lows when we just traded sideways in that flat range between 3.2 and what was it, 7, right?
Yeah.
Well, so our all-time low on volatility was right here, and we made a higher low on volatility here on this bottom.
Oh,
and that to me is telling me that this marked the bottom here is when Godwale pumped the price from 3 cents to 5 cents with 4 million bucks, and he was enticing dumpers to basically like, here you go, take your 4 million bucks and get out. And then this was just all like playing possum for the market to let it get down to capitulation lows. And then you made a higher low on volatility.
Yeah, that's really good. That's a good analysis there. It's a good chart, actually, really good. Also too, I will say to kind of, it's not necessarily a sidetrack, but not specifically in regards to volatility, but to kind of go off of the maybe minor resistance you might be encountering. If you check the RSI and the Hex chart.
I'll pull you up.
Oh yeah, I forgot. We're not even looking at the chart. Is my chart up yet?
Yep, you're back up.
Yeah, so if we look at the RSI and the moving averages we have here, I posted a tweet a couple of weeks ago, I think, and I posted the bounce that we saw. This purple line basically broke the yellow and bounced this hard. This is right when we broke the ascending triangle. It wasn't all the way up here yet, but like it was maybe like right here at the time. But I posted a chart and compared it to this time, and I just said the last time we saw a bounce like this, we were in a bull market, to kind of confirm the bias. Like, hey, the bull market might be. I gotta stop saying bull market. I gotta say the bottom is in, okay? Because bull market means like price going way up. We might see sideways for a while, but still. But we were in a bull market last time we saw these volatile rips off of these moving averages, right? And sure enough, the thing ripped, and then it kept ripping and ripping. But now we're at a point where we're at this 50% range where you're going to see a natural slowdown. You're just not going to see things just 100% rip right through it unless this coin's brand new and you're getting fresh new money into it, which is not. So it's completely normal. It's completely healthy. It's a good time to settle down and find structure right here, right now. But it is promising to see that we're at the highest that we've been since technically January of 2022. But if we can pull back down and turn, in terms of RSI, right? If we can turn this, May of 2022 range into like some form of support, that'd be great. But what I would want to see, just to be like a structure freak, being a TA guy, I would like to see us slow it down a little bit, maybe have this purple kind of curve down a little bit, let this yellow catch up to it over the next few weeks, and then boom, next time we get that. Basically, what happened the first time we saw a huge push off this moving average and then a retest, the first push, we saw Hex price go from 8 cents to 22, 23 cents. It came back down and touched it. And that's when we went from 14 cents all the way, or no, wait. That's 1.4 cents. Sorry. So that was 0.08 to 2.2 cents. Then we went from 1.4 all the way to like, what was this, 6 cents or whatever. And then that was like, okay, Hex is going parabolic. Everybody was in. Every dip that came, everybody ate it up, So I would like to see a little bit of a slowdown. Let's get some structure on the price chart like we talked about a little bit. Let's see, these moving averages and the RSI touch each other again. Give us some of that bull market action that we once saw in the past. And then that would probably be, like, say this does slow down, tap off and bounce, that might be the little resistance pull, boom, that breaks us above this macro downtrend once and for all. And then you're not looking at sub 10-cent Hex for a long time.
Yeah. So to complement that, this is the kind of structure you'd want to come back and build on, that like 3.2, 3.3 cent range before eventually ripping out of here. And this is exactly what we did back here at the 10-cent level. So you could see it similar to this pattern here or this pattern here. That's kind of inconsequential, but you just to see some consolidation here for like maybe 2 to 3 weeks, and then sometime towards March you get a good update from Richard, and then like basically you go and you bust that level, and then I think you're really going to get a magnetized toward the 618, because this is basically clean, like fresh air in there. We traded a lot here, but on the way down we didn't really trade. So maybe we just kind of get back up, and then this becomes our new level, which is like set, like, what was that, like 10 cents? Maybe we're trying to get magnetized, and then we'll come back down and test these levels.
Yeah, 10 cents is that massive psychological level. And yeah, like what your chart's showing, let's just get a bull flag, right? When's the last time we had a good bull flag outside of that bear market? I mean, you see bull flag, bull flag, bull flag, bull flag, right? So let's just get ourselves a nice bull flag and just prepare. And also too, like I said, with the sentiment in the world right now, with Hex at least, it's like people know what this thing's capable of. There should be no reason to doubt it. So if we do get this dip, people aren't going to let this thing go that low at that point. I just don't foresee the price going much lower than 3 cents at this point. If it does, then it might be doom come time,
Yeah.
But,
it might be another full year, guys.
Yeah, if Richard Hart just says, "Hey, fuck it, Pulse Chain's not coming out, guys. Let's just focus on Hex." Yeah, maybe that or something. But I just don't foresee, if the sentiment is what it's starting to shift to. Let's just get that structure move up. But I bought my own lows around the 1.7 range that I've been kind of forecasting. I would 100% buy in again around the 3 cent range. And if it goes lower, I don't care. But 3 cents, if price goes that low, I'm really going to start unloading a lot of the liquid USDC I've been sitting on this bear market. But I think it is time to start.
I think you're right. And to support your point, this move here basically solidified what Hex is going to do, what kind of performance you can expect in the coming bull market.
And look at all the green there too. You don't see that much consecutive green until you really go back to the bull market, all the way to the left of the chart.
Yeah, so I got a pretty cool chart here. This is basically the questioning, can we get 3 green months? Because anytime Hex gets 3 green months, you get 1,000 to 2,000% run. That's just a statistic. So that's what's happened before. And so if we can close this month green, which, by the way, if we close anywhere above 2.7 cents, it'll be a green month. Look at these dojis on this last time we did 3 greens. So we have so much room to work with, and you should feel very confident knowing that a pullback here is to be expected, and that you just need support above that 2.7 cent level at bare minimum. So
Absolutely.
3 green
Yeah.
months, baby. That's what we want to see.
That would be really nice. And also too, if that if I don't think it would doji if that thing wicks, but it'd be nice to see if this monthly candle all that's current had like a little bit of a wick to the downside, then the doji candle has the wick that's that tall to the upside. That'd pretty much tell us like, yeah, it's ready to go up.
Yeah. I'm getting a little bit excited thinking about it because yeah, it's been oversold for so long. And honestly, you guys, another way to break this down, maybe I don't know, maybe you've thought about this before too, was just how like any price performance that we had over this level here at 12 cents, in my mind was kind of like all pulse chain hype, right? That's why that level broke down so hard when you didn't get a pulse chain launch
Yeah.
here,
Oh
right?
yeah.
And so because of that, if you just ignored the entire price chart from like 10 cents and up, um, that might be more realistic of what kind of channel you'll get coming out of the bear market. So let me draw a channel here. Basically from these lows to here and then up to here, turn off the magnet. And you can see like something like this. This is what we want to hold coming out of the bear market. So we don't need to see some crazy performance. We just need to see X hold support on the bottom of this channel because it became support and pre-big payday and then post-big payday.
Yeah, absolutely. Yeah, absolutely. And yeah, I feel like that 10 cents is kind of a fair market value for like lack of better terms, because you're right. I made a tweet about that a few months ago, thinking like too, if pulse chain wasn't a thing, this thing, I just didn't see a reason for Hex to run that high, right? I mean, Hex is Hex, right? We know,
Yeah.
everyone had their FOMO pants on. Pulse chain really made me that much more excited. I mean, I had like my brother investing like 30K into a pulse sacrifice and as his introduction to crypto. And yeah, he's on my ass about that every time he sees Richard Hart outrage market.
Oh, you poor guy.
Yeah,
Well,
but
he'll be thanking you in a couple of years, I think.
yeah, I'm
So
like, just Richard, just launch it so
patience.
people can shut up, please. um, yeah, no, I think 10 cents is like a sort of a fair market value, and light the candles, everything, psychological level, so much going on at that 10 cent range that yeah, to really set Hex off this next bull market, just get to 10 cents, break it, and just create a nice floor above 10 cents. And then now you're looking at 75 cents, $1.80 before I think the next top will
Yep.
be in a couple of years.
Yeah, I wanted Freddie Quotes actually wanted to see us do it like a fib extension out to see kind of the highs. But before I do that, I just wanted to show you kind of what the structure could look like going into like in a full on sell off capitulation. You'd basically do a double bottom on this chart. I'm not anticipating that, but it's not out of the question, right? Because we've done it before.
Yeah. Also,
And then you
too, Ethereum, when it had its first 95% dip, it did a massive double bottom, but it was over the span of a few months. And it did a 95% dip, ripped up, came back, touched the low again, and then sayonara from that point. So, so even if that happens, I mean, I think 1.7 cents, that it just, I don't think you're getting much lower. You're not going to get lower than 1.7 at this point.
Yep, I'm with you on that. You want to run some fib extensions for him?
Yeah, let me see if I could. How about you do that? Because my mouse is just all messed up.
Sure.
These things are annoying me right now.
Let's see. I'll pull up my cam so you guys can get some.
I can put some on my chart and like screenshot and send it to you so you can post it wherever you want to post it. I can barely use my drawing brush right now in this chart.
Okay. It's okay, dude. You can see it though, right?
I can see yours, yeah.
Okay. So there's two ways that I like to do this. Whenever I do this, I like to use the fib extension tool. Where the hell is it? Here we go. So basically, I got the weekly chart here for Hex, and I'll turn on my magnet so it's precise. And I'll go from the all-time low to the first major high back to the all-time low. Let me make sure that this is on log. Yep, it's on log, and I'm on log. Okay, cool. So everything's good. So for those of you guys on Wake Up Hex that don't know how to use the fib extension tool, there's a nice little button here called fib levels based on log scale. When you're on log scale, that's what you want to do, okay? Yeah, this is crazy. But anyway, so Hex basically on its first major run up hit the 2.0 level. And I'll color it for you so you can see it exactly what I'm seeing.
And I'll draw one too while you do this, and I'll have it prepared so when you show my screen, I don't have to build it.
Okay, cool.
If I could build it.
Let's see here. What color do we want? Green. green for the 1618 because this, okay, so in Fibonacci analysis, the 618 is the golden ratio, okay? So it's got significance there. 0.272, do that in yellow. Okay. I think I got my tool set up. So basically from that first all-time low on Hex to the high, which was, you know, way back in the beginning. I'm basically using data points here, here, here. It projected out and it actually hit and met 2.72, or I'm sorry, 2.272, and basically exceeded it on 2 occasions. Okay. So that was like the first major move. It did a huge run up. It was 12,000% roughly. Okay, it was a 10,000% move in 119 days. So we know that Hex can meet the 2.272 target. And we know it can meet and exceed the 1.618, which is the golden ratio. So let's do it from the big payday dip. From the low pre-big payday to the high of the big payday back to the low. Once again, Hex met the 2.272 and exceeded it and actually went to the 2618. So on the first cycle, it did 1,000%, 10,000%, I'm sorry. And on the second cycle, it did 24,000%. So it actually exceeded its first run with its second run. So if you use a similar thought process and say, okay, if the bottom's in, right? If the bottom's in, and this is our local top, and we come back down to rough, I'm just going to give you a rough double bottom at what we've been saying, like three, let's just do 3 cents, just to do a round number. The 272 target is at 45 cents, and the 68 cents is the 2618, right? The issue that using this tool from this level is it's not, this isn't the top of this run, I don't think. So then you have to think of it another way. Like, let's do a fib retracement with extensions built into it. So this is where you go in, you go to the top of big payday, and you just go simply down to the bottom of that low, that 86% drop that Jenkins showed you earlier. And in this case, the price went up. Let's see, did it hit the 3.0? Yeah. So the price went and hit the 3.0. Okay. So that move was, again, 24,000%. That's like 19,000%, right? So if we project out, okay, so we know Hex can do the 3.0, it can do the 2.618, it can do the 2.272. If you account for the law of diminishing returns, which means every cycle is going to get a little bit weaker just due to the size of the market. Here's your targets. 272. This is crazy. The 272's got you at $36. The 2618's got you at $120, and the 3.0's got you at $400. So let's be a little more conservative, right? Let's say that we got the law of diminishing returns, and we're still targeting that golden ratio of the 1.618. That's got you at about a 420 price target.
420. Freddie quotes loves that.
Yeah, all day, Freddie. So I think, you know, I think that the major first target that the bulls are going to be able to get the price to without much effort over the next 2 to 3 years is $1.25. I think that's like the main level that we want to see, that we will form support on, and that will end up being the launch pad for the actual speculative bull run. But if you factor in a pulse chain launch where you double the coins and maybe the economic energy gets initially to split into two, what's half of $1.25?
Was it 75? Oh, no.
0.6, so it's 62.5 cents, which lines up with my fib extension, which was 60, what did I say, 66 cents or something? So that's basically where I'm getting those numbers from, is, just to clarify, the fib extension would have you at, this is assuming we come down to retest 3 cents right now in this move. You're looking at 67 cents, which is like times 2 would be roughly $1.20, $1.30, okay? Across 2 chains. Economic energy gets divided in half. But then if you think about virality, documentary, pulse chain adoption, anything else that you can't predict, plus speculation, the dollar prices can move up quite rapidly in the same way that Hex performed over 10 cents last year on hype alone, where it did a 5x on hype alone. I'm going to pull up I'm going to pull up Freddie. I'm going to pull up Jenkins now, and he's got something worked up for you.
Oh, yeah, I put Just it's a lot more simple, I would say, nothing too complex. Just all-time low. And I'm sticking to this, right? This is just all-time low to all-time high Fibonacci. Let me just extend this to where this line's at. And I had this on my charts and streams all last year, but basically all-time low to all-time high, that 1.618 golden ratio, you're just about 80 cents. My next local top in a bull market, I always said 75 cents. So that kind of aligns there. But the 3618, and you already kind of described Fibonacci's and stuff, so I won't like go into my whole spiel, but a number that I really like in forecasting futures. I like the 3618. That's usually in my experience in crypto, at least, where I see a lot of coins that I, get in and out of. Once I see a 3618, that's when they calm down for a while. And that's when you see like the annual 80% meme drop or altcoin drop, but I would say it's more realistic in my mind. I'd rather be so conservative to the point that if I'm wrong and we outperformance by 10x, I would gladly be wrong. But yeah, I would say bull market next top. I like 75, 80 cents still, but $1.80 is kind of the target. That's the number I have my sight set on for Hex in the next bull market. And I know people don't like when I say that, because this on this log chart, it doesn't look good. It's not that much higher. Of course, if we keep this trend and just do some sort of fractal, let me get this thing. Hang on. Here we go.
I like it. I like that. And I want to talk more about that.
Like if we just do a fractal, just so you guys don't kill me, like okay, if you guys want those numbers, here you go. $55 Hex, so you guys don't kill me. But I'm just going to keep it like, just as an investor, what goes through my mind, my realistic targets before we get to multi-dollar Hex. Let's just get to this 618, see what happens, flip this all-time high into support line a few years from now, or maybe next year. And then, yeah, $1.80 is really where I'm setting my golden kind of target. And then I won't share my strategies, but those are two numbers I'm looking at. I'll leave it at that.
I like that a lot, and I really do think that you're right about something, and I think that maybe you tell me what you think about this. I'm gonna pull up mine here. What is the harm in quickly getting out of this range, right? Coming back down to test that 3-cent level as support, finding support there, and coming up, and then trading between 20 cents and the all-time high for a long time while ETH and Bitcoin figure their shit out, basically. Like this is like assuming that you spend like 260 to 300 days basically trading between 20 cents, which was our previous resistance level here, and the all-time high before trying to make new highs going into middle of 2024, end of 2024, where you start potentially starting the real official full-on crypto bull market. There's things that's going on the data level that makes me think that something like this is possible. And one of them is obviously liquidity, because the liquidity is still so low in the TVL here. You can see that we're basically at roughly the same levels we were back in this general region. And that the price was able to move from 5 cents to 22 cents on a change of liquidity from 3 million to 6 million. So if we're at, let's say at the low, we were at 9 million and now we're at 12 million. What if we just trend between 9 and 18 million sideways, but the price goes up, by a factor of 3 to 4 and gets us into that new range. And then we can try to find support up into this range up here somewhere and, try to flip this as support above 10 cents. If you do that, there's going to be opportunity for people to make money in the chart. It'll remain really volatile, and it would just be a really good setup, which we've done this before in Hex. So setup going into the real bull run. So you might be right about your top at like here at like an 80-cent Hex, and that becomes resistance for multiple taps, and that it takes us a long time, like 300 plus days, to basically work our way out of this range, while money, like all the guys printing inflation, kind of destroy their positions, and people think that we're going to go way lower, and then we never do, and then max pain up, and then max pain down. You just create this environment where everybody kind of gets tossed in the mud, like a throw of the sand, so to speak, and then start to build structure up here for a real bull run in 2025.
I would say the possibility of that, I think it could happen. I would say it's a long shot, but if that happens, it'd be for one thing only, and that's just Pulse Chain. It's here. It happens. It's out. Welcome to Pulse Chain, and we're live. We're rocking and rolling. All eyes are on this ecosystem. I don't foresee that type of pump happening without Pulse Chain's help. I feel like that's Hex's Achilles heel right now is Pulse Chain. If things are going good, Hex is going to do well. If things aren't going well, Hex won't. So if
Yeah,
we
that
get
makes
some
sense
sort
to
of
me.
yeah, if we get some sort of like Godwell-ish pump like that again, it has to be Pulse Chain. And also too, to go back when we were saying earlier,
By
I
the way,
think
this is April, mid-April, just so you know.
mid-April. I mean, hey, or mid-May. He didn't say which year.
Mid-May. Yeah, sure. I'll take it.
Yeah. What was I going to say? What was I going to say? Oh, what got Hex over 10 cents last year, like we were talking about, was Pulse Chain hype. I feel like it's the same exact situation. I don't think we see Hex over 10 cents anytime until Pulse Chain is actually out again. I can see us flirting with between the 5 and 10 cent range, like that sideways channel you have. Maybe without the massive pump, we can probably see something
let's
like that
take away the
happen.
pump. Let's
Yeah, if you
assume
take
that
that
we've
away,
already
I can
seen. Yeah.
I can see us bouncing between 5 and 10 cents. And oh yeah, like this. Like, yeah, if we just come back down, flirt with that 3 cent range, really confirm that, come up, test 10 cents as a support, as a resistance line.
Mhm.
That chart right there, you should screenshot that. I think that's something that, I mean, maybe the time frame's not exact, but that's something I could
Yeah,
realistically see happen. You know,
100%.
we set that 3 cent floor, solidify it, and then now we're bouncing between 5 and 10 cents for a while, and then boom, Pulse Chain gets us above, and then sayonara. But I
So
think
here's
that's a better idea.
100%, and I agree with you, and I want to reinforce that, and I just want to say that the only thing that's gonna make this thing go vertical is true FOMO or virality, and like that's something that's unpredictable. So as like a stable-minded investor, let's assume that this is more of what you're gonna see is a slow grind up to that 10 to 20 cent range slowly over until into January of 2024,
Yeah,
while Bitcoin and ETH figure their shit out. And then you get the pump, maybe, Pulse Chain 2024, maybe in May. We might get V3 this year, but we might not get Pulse Chain until next year. And that's not a bearish thing. That's an opportunity for people to accumulate an asset that's proven now that it can perform well off a low.
yeah. I want, if you could screenshot this chart and like just send it to me, because I really like this, and also too that backs the sentiment of like, oh, if 3 cent floor is created, bear market's over. And I talked about in the video I made on that, we'll probably see a sideways crab market for up to a year. And like you were saying, as an investor, me personally, I'm not expecting virality. I'm not expecting Pulse Chain in 2024. Do I hope it happens? Of course. Is there a chance that it can happen? Of course. I'm telling myself though, no virality, no official parabolic crypto bull run, no Pulse Chain or anything till next year. But I can see a sideways, gradually increasing market that's going to stay above 3 cents and solidify that bottom that we saw at 1.7. So I like this chart a lot right here with this little fractal you got going on. So send that to me.
We'll do. We'll make a tweet. I'll send it to you.
Yeah, put it in the
Yeah,
tweet.
this is definitely what I'm thinking, man. This is one of two options. Either you get a good announcement and then you get a rip, and then this structure forms higher above into this band, or this band. We don't know. Where this structure forms is dependent on the FOMO pump. And when do you get it? I don't know. I can't predict that.
Exactly. It's the same way you couldn't predict Pulse Chain's delays or anything. Like I said, just wait for Pulse Chain. Just don't sleep on it. Like, never financial advice, of course, but DCA is the way. Sounds cliche, but if you just load those bags, like for the people that DCA'd over the last few months and kind of added to their bag, this pump really was nice and sweet. So imagine a Pulse Chain pump. You go to sleep one night bearish on Hex because it's September 2023. There's nothing to do with Pulse. And then you wake up the next morning and then Pulse is all of a sudden about to be a thing and the price is 2-3x. Because we've seen Hex have 50-60% days, after it got over a penny. Multiple days too.
If you're happy with that, we can wrap it up here. If you have any, or unless you want to keep going.
No, I'm good. How far are we into this? Oh yeah, we're over an hour.
We're over an hour, and it's cool. I mean, there was definitely like a lot of other assets and things I wanted to cover, but maybe we could save them for another time soon in the short term.
Yeah, let's get back. Let's see what happens. Let's see what happens with this 3 cent potential floor. Once we start getting some structure created, and let's do a stream after we either get a floor or break above that macro downtrend, and we'll just touch base there and start projecting new stuff with that updated data.
You got yourself a deal, my brother. Well, I appreciate you coming on here. Seriously, it's been a long time coming, and I love doing TA with you because it's really based. So thank you.
I appreciate that. Shout out to you, AXiS. Thanks for having us here. I like what you're doing, and just keep doing what you're doing. That next level genius brain stuff you post, I know it's valuable to the community. I keep it simple, just looking at nothing but a price chart, but you go behind the scenes and dive even deeper, and it's pretty cool to see those levels on those other charts match up with the little things that I see just looking at candles. So keep it going.
Let's just keep on grinding, dude. Sometimes in analysis, longer term visions and slower DCAs and simple analysis works out a lot better. And honestly, 99% of investors would do better listening to Jenkins because he's going to tell you simply what's going on in the chart. And that's a good thing. So appreciate you, brother.
I'll
Thanks,
see you
guys in the
guys
chat.
later.
We'll see you.